Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, welcome back to the show.
Jim, I'm glad to still be on the show.
John, VR Resources announced that it has completed a drill program at its Roanoke project in Northern Ontario. Do we have a discovery here?
VR Resources published a pretty sparse news release saying that it had completed its 2 planned holes to a depth of 500 to 600 meters and had pulled out of the project instead of drilling the additional holes that they were planning because it was too damn cold. It was a helicopter-supported program, and they had hoped that they'd be able to get water for the drilling from some pond nearby, but everything was frozen solid, and it just got too expensive to transport water from the river over to where the drill rig was located. Now, the reason for the sparseness of the news release is that the results of these 2 holes have forced Mike Gunning and his team to change the model of what they think they are chasing. The initial model was that this big mag anomaly represented an intrusion of some sort, either a breccia body similar to Olympic Dam or Carapatina, or a carbonatite intrusion similar to Carapatina, both of which are very copper-rich, and there is, regional stream sediment geochem with copper values all over to the north, and there's also local examples of a sort of fluorite copper-gold bits of mineralization whose origin has never really been explained. But the first hole that they drilled last year, they drilled it in a mag high within a general gravity high, which suggests a dense body at depth, and that hole went through the limestone platform that sits on top of the Archean basement, and there was pyrite infilling of the spaces within the limestone that pretty much explained the IP anomaly, the chargeability high, but there was no copper values, but there was evidence of some sort of hydrothermal activity going on. So the second hole was drilled a bit to the north of this into a mag low, still within the gravity high, and the hope here was that fluid flow had caused magnetite destruction, creating this mag low. Now this hole was disappointing because they intersected a swarm of lamprophore dikes, apparently post-mineralization dikes, and they've just pretty much wasted that hole, so there was nothing there to explain anything. And then the third hole, they drilled even farther north on that line into the mag high, which is in the northern third of the gravity high. And they got fluorite veins in this, which they're pretty excited about because that is an indicator of an IOCG system. But when they looked very closely at the magnetite within the rock, they said, "Oh, this is more metasomatic. This is not the kind of magnetite created by a hydrothermal IOCG system." So they've backed off from this idea that this gravity high and the mag highs represent a big intrusive body that's the engine for the a big IOCG system. But they've recognized that there's a north-south fault structure and an east-west fault structure, and they plan to go back on the property in the summer with a 4-hole drill program, $400,000 Canadian or so, and they'll drill the structure to the west and also a mag low coinciding with a gravity high to the east, because they figure now the real area of magnetite destruction is towards the east, where there's a very low magnetic anomaly, and that's, of course, where the fluid would have destroyed the magnetite if the system's there. But they now believe that this is one of those IOCG systems where the mineralization will have been structurally controlled by these faults. So it's a different model. It's not like having a big bullseye on the map and pounding a couple holes into it and going, ta-da, we have a fantastic discovery. It is a bit of a more difficult target, and the next round of drilling will tell them whether or not they're going to intersect something that has the copper-gold mineralization justifying them carrying on. And of course the stock got hammered from being up at 40 cents where I recommended it recently. Now it's down below 20 cents. The market's saying, well, this discovery is not yet a discovery. It's going to be a tougher discovery. And besides, we have all this fallout from the market sell-off where juniors have been liquidated left and right as people just say, the end is here, we got to get out of everything, we got to get into cash. But VR Resources is still one of my favorite juniors because they have also developed targets in Nevada's Walker Lane at the southern end, not that far from the Round Mountain system, which has 18 million ounces. And the key project there is the Amzel project. And it's in Forest Service land, so they have to apply for a plan of operations. But as Mike Gunning explained to me, this is an area that's classified as inventoried roads. In other words, roads have been driven through there for whatever reason in the past. So it's not the same pristine wilderness as areas classified as inventoried roadless. So the permitting cycle is not as brutal. Plus, this is not sage-grouse habitat, and the sage-grouse are something that the Forest Service is extremely protective about. So they started the process last year. They hope to have a drill permit, this plan of operations, in place by September and start testing this IP anomaly that they generated in 2019. It's in a part of the property that has not been drilled in the past. It overlaps with an alteration halo, and it's got geochemical evidence at the surface of gold-silver mineralization that suggests this is a very big system. It's part of the Big Ten caldera, which is a big, giant, collapsed supervolcano from way back. And the question I asked Mike, but Nevada is like California. They are now pursuing a suppression strategy where you're not supposed to go anywhere. You're supposed to stay at home, work from home, not go to the office and do anything. And in fact, since he's based in Vancouver, there's also a ban on Canadians coming to the United States and vice versa. So how are you going to get anything done? Well, he says it's fairly straightforward. They will be hiring U.S.-based consultants from April through June. They will be doing all the required surveys that the Forest Service told them this is what you need to do to get us to approve this. And then, of course, the crunch will be in the summer, July, August. That's when the Forest Service will be given all the data and will be going over it. And a very big question that everybody's asking right now is these government bureaucrats involved in doing all these approval processes, obviously because they're government employees, they'll continue to get paid for doing, even if they're staying at home doing nothing. But will they have the will to get stuff done even when they can't go into their office? And again, will by the summer all of this have eased? And so the stock's languishing here below 20, despite having $2.2 million in the treasury, more than enough to go back into the Roanoke project in the summer and see if this is a big discovery on the threshold of happening. But the question is, by September, will they be in a position to start drilling a blue sky target on the Amzel project with the potential to deliver a major gold-silver discovery?
We'll have more from John Kaiser right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Azimut Exploration announced it was proceeding with a 6,000-meter drill program at its Elmer Gold discovery in Quebec. Do we have reason to hope this discovery will grow a lot bigger?
That has been a very big question since they announced the results in mid-January. Fantastic gold results from 7 shallow holes, maximum vertical depth, 150 meters, but they were all within a sort of 75 meter by 200 meter footprint, which is basically defined by what happened to outcrop in the area, where they got good surface values through sampling, and then they ended up stripping it and channel sampling and developed this model that, we have a system of extensional veins, also known as reedal veins. That's sort of our short veins that strike in the northwest-southeast direction, and they're within this northeast-southwest trending shear structure of several hundred meters wide, within which there also appear to be veins running in the same direction. And so when they drilled this, everybody said, this is one of these useless little, outcrops with a little bit of gold in it, the kind of thing that the juniors like to re-drill over and over again every decade and come up with some nice results. This is just a flash in the pan type of thing. And the results demonstrated the model. And the key thing about this model is, you have the shear structure, geological context. You now have evidence that there is these reedal type of veins within it. They're well mineralized with gold. It's an orogenic system, so that means it probably persists at depth. But do these vein sets repeat themselves along the strike of this shear structure? And the stock ran as high as $1.50 or $60. They even managed to pull in a financing of $6 million at $2.45 with a strategic investor whose identity has not yet been revealed. So they have plenty of money in the treasury to get this job done. But everybody wanted to know, what are the results of the IP survey that you guys completed in mid-February? They had hoped to have results for PDAC, but the guys couldn't crunch it in time, so they had to just sit there and say, well, yeah, we like it, we think it's good, blah, blah, blah. Well, today's press release was really yesterday's press release was all about the graphics that they included, and they show that the chargeability highs, which represent the disseminated pyrite, correspond with the resistivity highs, which correspond with the quartz, which is the main host for these veins. And what was really interesting was that the Patwan outcrop is actually a small spur off a much bigger anomaly that's like 900 meters by 300 meters that they call ELM1. And then, to their surprise, they had to end up extending the grid to the southeast in the northern or the eastern part of the property, and also to the northwest in the western part of the property to fully close off additional anomalies that the IP survey lines were revealing. So they've got ELM2 as another very sizable anomaly on strike to the northeast, and they've got a parallel one called ELM3, which is a couple hundred meters to the north. And if this correlation between gold and the disseminated pyrite and quartz holds, this is now a very substantial tonnage footprint that they are testing. Even with it's just a 2.5 kilometer strike, a third of the overall shear structure's projected strike length. There is plenty of tons to build a lot of ounces. So they'll be starting with a 4,000 meter drill program for 20 holes on the ELM1 target, which is just to the south of the Patwan target, and they get a second rig going on the ELM2 target to the northeast. That will do 2,000 meters in 10 hole, and they also hope to include the ELM3 target, which is the parallel one to the north. Now, there's additional targets to the southwest that they'll hit later. They will take a break in late April or early May for spring breakup and to allow the assays to catch up. However, this type of target, when that core comes up, you can bet everybody on site's going to be looking very hard at it, because visually you'll see the pyrite, disseminated pyrite in the core. You'll see the quartz veining. And because of the nature of this discovery, you may also see visible gold. So they will, in the next 2 to 4 weeks, drilling's expected to start Saturday. They will know in the field whether or not they have something very substantial unfolding. And this is important because we are now in a generalized bear market. I do not see anything significantly turning around the general equity markets. Gold has been hammered as a result of all these investment funds having margin calls and needing to sell anything that was liquid. And gold, of course, is liquid, but always at a cheaper price when somebody has to sell an awful lot of it. So when you look at it from a distance, gold is down, all the other base metals are down, the general economy is going into a recession, maybe even a depression. The juniors have been wiped out. There's no money really available for it. How's an Azimut exploration supposed to get anything going? And it got hammered down below $1 yesterday, and even today, right now, it's bounced back. It's traded as high as $1.22. As people realize that, the markets are not going to go down forever. We're probably not over the worst of it yet, but at some point, everybody will accept, okay, this is the new valuation level. Now we got to wait to see how this COVID-19 virus plays out and what sort of measures the government comes up with to offset all these people suddenly not allowed to work because a suppression strategy is underway to try and flatten the virus curve. And these juniors represent these small microcosms of potential wealth creation. In the case of more advanced projects where you have ounces in the ground, those you're going to have to wait for the gold price to trend higher. But for discovery exploration plays, especially high-grade gold ones such as the Elmer project of Azimut, here you can focus on this, and nobody cares about all the other stuff. The company's valuation was only $66 million yesterday for this 100% owned project. This thing could end up being worth in excess of $1 billion, depending on, do all these IP anomalies do represent similar mineralization as Pot 1, and how deep do they go? So this is an emerging gold discovery play. It will attract attention. As soon as we start hearing that the geophysics, the IP survey, is an indicator of where this stuff is, and people start seeing that this is a large-scale discovery, then you'll see legs in the surrounding areas, all the little companies like Dios Resources, even the bigger ones like Midland Exploration, which staked a big chunk of land to the south, and others like Harfang, which grabbed ground in the general vicinity, and Sirius Resources. This could become the basis for an area play, a James Bay area play of the sort we hoped for last year with the Mithril copper discovery, except this is gold. And we're doing it in the midst of an absolutely horrific economic market climate. And this kind of reminds me of 1982, when we were in the pit of the recession created by Volcker jamming interest rates to 19% to kill inflation. And out of that was born the Hemlo discovery. At this point, we don't yet see 20 million ounce scale for the Pat 1 project, but we are seeing the beginnings of a significant discovery that should start attracting audiences who will shrug off what everything else that's going on elsewhere, and they'll put their capital into this, and it'll have a dedicated audience that will sustain valuation based on results coming out.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Midas Gold managed to close a $35 million U.S. deal financing for its Stibnite Gold project in Idaho. What will it spend the money on?
Jim, it's really quite disgusting what they will be spending the money on. They have already spent $35 million U.S. on the permitting process, and they're not doing any more drilling or metallurgical studies or anything like that. They've spent $100 million on feasibility demonstration in the last 6 years, showing that, here's what it takes to put this gold antimony project back into production, to reclaim all the mess left from past mining operations. But this financing they did now, and they announced it, February 27th, when the stock originally was in the sort of 65 cent range. It was a convertible price of 53 cents. They said, we need to do this now because we have no idea how long this permitting process will take. This money will take them all the way through to the end of 2021, by which point they will have spent $70 million just on the permitting process. And this is Forest Service in Idaho. They've had numerous delays. Some of them were the fault of Trump's government shutdown to get his wall built to keep Mexicans visiting the United States. But others have been caused by the very fact that the Forest Service is just not technically capable of fulfilling all the requirements of the permitting process in the United States. And this has been frustrating even for the Forest Service itself, because they're not really being obstructionists. They just don't have the technical skills to do all these things required. Now, of course, since February 27th, which was, just a couple days before PDAC, everything has gotten a lot worse. So, on the 10th of March, they changed the financing conversion price to just 46.5 cents or so. And, of course, since then, things have gotten even worse, especially with the Canadian dollar now down below 70 cents U.S. For 1 Canadian dollar as a result of the oil price collapse. But they managed to get this done a couple days ago. They have that $35 million U.S. in the Treasury. John Paulson, through his Paulson and Company hedge fund, of which I think he's now probably the only shareholder left, he took down $25 million of that. The other, $10 million was taken down by different investors via brokerage firms, which presented it. The stock is sort of languishing in the 35 cents to 40 cents range. Paulson will end up owning about 40% of the $535 million fully diluted. They expect to file the EIS by April, so that's not really something that any government bureaucrats are now in the way of. But then it'll take another year to get the whole approval for the mine. They hope to put out the feasibility study everybody's waiting for in sometime in sort of June or July, 3 months after the EIS it gets filed. And that's going to be very important to the market, because we really want to see what is the CapEx in light of all these tariffs that have been thrown up by the U.S. for aluminum and steel and so on, and what are the operating costs for this system. And, of course, they did a lot of work, infill drilling, to bring back ounces and antimony pounds from the resource estimate that was in the PEA, but which disappeared from the PFS put out in 2014 because they did not have the density of drilling to allow all those numbers in. And from everything I've seen, those PEA numbers are back in the system, plus more. I also talked to Stephen Quinn, and he said that this high-grade antimony vein that they identified in the process, the whole plan for putting a diversion tunnel to allow the river to bypass the whole open-pit mining operation, it has been designed to provide access to this very high-grade antimony vein, which contains as much antimony as will be put out by this 14-year mine life that's going to churn out 300,000 ounces of gold per year. So this is now a strategic resource for the United States down the road. It's one additional reason to permit this and get this built sooner than later, because almost 85% of the world's antimony comes from China. And this coronavirus has really changed everything in the world. All the status quo assumptions, China right now seems to have, its suppression strategy seems to have worked for now. It's claims the only new infections are coming from people visiting the country, so they're also putting in bans to keep people out so that this thing won't resurface. I suspect that will resurface down the road. China's busy now helping out other parts of the world like Europe and that, because the United States is busy. It can't even help itself. It doesn't have anywhere near enough test kits. It doesn't have anywhere near enough critical care hospital beds, nor does it have ventilators to deal with what's going to be the natural increase in infections from this virus. So the question is, what is the gold price going to be down the road? And today it's like below 1,500, and that's, I think, mainly because of investors that were leveraged, that had margin, that have been forced to sell gold to raise cash. Meanwhile, they've also been selling 10-year T-bills whose yields have started to rise. This is quite unusual. This means there is this massive rush for liquidity to ride out basically a shutdown of the American economy with really no end in sight, because we do not know what will count as an all-clear signal to end all these lockdowns, shelter-in-place instructions, and so on. This could unfold for a good chunk of the year. The Imperial College in the UK, a bunch of epidemiologists just published a paper modeling the different scenarios, and the one that where absolutely nothing's done, everything would have peaked by June, July, and then be declining because of herd immunity. That, of course, would have killed 1% of all the infected people, which would have been skewed to elderly people. The so-called suppression strategy, which is to really shut down everything and make people stay at home. When you look at that modeled graph, that's kind of scary, because it says things are going to rise well above critical care bed infrastructure by June, July, die down a bit in August, and then come the normal flu season, a huge spike in the final quarter of the year. If this is going to be the path of this virus, and with no vaccine available that works and that can be manufactured in sufficient quantities, we are dealing with a major extended economic downturn. And the measures that they're taking right now of printing money and sending people, or thinking of printing money and sending people checks, that's just a temporary stopgap. That does not do anything about the major disruption of people who are still working, which is that group of people, the post-boomers, who have the lowest vulnerability to this virus. So there is going to be more and more done to accommodate the rising resentment of this class of people, which by definition is young, but it's also the one that it's an economic class. It's not as well off as the retired boomers, who are the primary beneficiaries of this suppression strategy. There's going to have to be major fiscal stimulus. And as all this is finally figured out, people are going to look at gold and sort of say, wow, gold is really, really undervalued. So I expect gold to, within the next couple of months, as people get used to the bad news of, ever higher infections every day, and the market stops going down because there's no more point in selling anything, then you'll start seeing gold start to rise. It'll be very similar to what happened after the worst downdraft of the 2008 crisis. This time it won't really be a narrative about fiat currency debasement and hyperinflation. This time it's going to be more about the uncertainty of how are they actually going to solve this, because part of this problem is that the United States, with its America First policy, has in essence isolated itself from the rest of the world, and the rest of the world is proceeding without any assistance from the United States. The role of the U.S. dollar as the world's reserve currency is being rethought. So we're entering a type of interregnum where nobody really knows how things are going to shape up. This idea of the elites that Trump is an aberration who will come and go, globalization will be restored when he's finished his 2 terms, everything will be great, America will continue to be the benign soft power superpower that keeps everything under control. All of that is now up in the air, and demand for gold will rise. Even countries like China, which are sitting on a bunch of U.S. T-bills, may start converting those T-bills into gold to just mop up whatever loose gold is happening. So I'm still convinced that although gold has been weak in the past couple of weeks during the downdraft, it is heading towards a major repricing into the $2,000 to $3,000 range. And companies like Midas Gold, they bit the bullet, they got the money in, they're going to be in the game, and they will very much benefit when the gold starts moving up.
John, thanks a lot for the update.
You're welcome, Jim.
You've been listening to John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.